In the fiscal cliff negotiations, globally, what would mean the most for the U.S. to do in terms of the global economy?
The best way out of this would be a balanced solution, because you will always find a school of thoughts that will say it's much better to cut spendings. You will find another school of thoughts that will say, no, it's much better to increase the revenue and therefore to raise taxes. And in the middle of it, you will have people that will say, in any event, we have to reduce debt, therefore cut deficits now and in the long run. We have seen studies of all sorts, and they will not demonstrate the absolute truth. My view, personally, is that the best way to go forward is to have a balanced approach that takes into account both increasing the revenue, which means, either raising tax or creating new sources of revenue, and cutting spendings as well.
I mean, right now, here's what it looks like. It looks as though they're going to keep the tax rates for the middle class the same and pass that, maybe without any work on entitlements, and maybe with a promise to sort of look for places to cut. Is that enough to keep the world feeling secure about the U.S. economy?
I don't think that it's enough, because there is still that degree of uncertainty that fuels doubt, that prevents investors, entrepreneurs, households from making decisions because they don't know what tomorrow will be. They know that a fix has been found for today, but there is still work to be done tomorrow and the day after tomorrow. So it would be much better to actually have a more comprehensive approach and to deal with all the issues.
You also, I think at one point, predicted a U.S. growth rate of about 2.3% next year, but that included keeping all of the, what we call the Bush-era tax cuts. What do you see in terms of growth for the U.S. next year?
Our forecast has been slightly revised downwards to 2.1%. 2.1%.
Not very much.
Which is not, but it's better than
it's
other places.
Losing, right?
It's positive. But if the U.S. economy was to suffer the downside risk of not reaching a comprehensive deal, then growth would be zero.
January 2nd arrives. No deal. What will we notice first?
Lack of confidence. Markets, I think, would react very quickly.
And I think
it would result in the stock market really taking a hit. But I would say that it will depend on what's on the horizon. If what's on the horizon is a bigger, better, comprehensive deal that addresses both the short-term issue of the fiscal cliff, the debt ceiling, and the long-term deficit and debt levels, then that would be different.
So that comprehensive plan, actually, even if it's a little late, you think would be better than some sort of, okay, let the middle class keep their tax cuts and we'll work out the rest later?
Better a comprehensive fix than a quick fix, yes.